In this episode, my friend Adam and I discuss how he has applied the infinite banking concept in his life over the last 6 years. We cover a lot of ground. Hope you enjoy. Thank you for listening. Welcome to the Banking with Life podcast. I'm your host, James Neathery, and I'm as excited as always. I'm always excited when I have friends and clients and interesting people, which is all I ever have on as guest on this podcast. But I'm excited because my friend Adam is with us today. And, full disclosure, Adam has practiced the infinite banking concept that I'm aware of for 6-ish years or so. Mm-hmm. And he's just a very cool guy, interesting guy, and you'll discover that as we have an unscripted conversation. So, Adam, hello, sir.
How you doing, James?
I'm doing well. Thank you for coming on, Adam. I know we have the opportunity to talk from time to time, probably a couple of times a year, and we've done that for the last several years. So I wish we could have recorded all those or a lot of those conversations, back, but we didn't. So thank you for coming on, and I'd like for you to just tell the people who you are, what you do. Give us an idea, give them an idea of who you are. And we'll just go from there. How's that?
No, that sounds good, James. Yeah, it would have been great to have those conversations recorded. I think you'd have a podcast in and of itself just right there. But as you said, I've been doing this for about 6 years. I think it was 2014 whenever we first got the policy started. My previous background, I was a Navy officer, got out and run a construction business, family-owned business. I've always kind of been unconventional when it comes to finance and investment. And I can't remember exactly how we got into looking at the banking with life, the becoming your own banker. But however that happened, it got put in front of me and it caught my attention, and we just kind of run that way. But getting back to my background, it's very unconventional, and I think that's what I liked about the banking with life. I had been in the stock market, minimal results there, and so I've just always kind of been looking for something different that made sense. And I think that through my conversations with you, we found what we were looking for there. But like I said, own business. We run a business. This stuff has helped a lot with that, and we can go into that further. But just an average daily person. I've got 2 young kids, 5-year-old, a 7-year-old.
That's what life's all about, right there.
Hey, it's military, own business, 2 young kids, just an average person. I'm not some $300,000, $400,000 a year person. Not a millionaire, just an average working person. And I think that's what a lot of people, when they see stuff like this, you talk trust, you talk life insurance, I think a lot of people feel excluded because, hey, I'm just a daily 9-to-5 guy. That's not for me, and I just want people to know that that's what I am. I'm a daily, I won't say 9-to-5. I think my days are a little earlier than that and a little later than that, but we run a farm. We run a ranch, so there's that aspect as well. But I think that's a good background for who I am. I'm just like everybody else out there, and I'm glad. Any questions you've got?
Yeah, I'm glad you say that. I mean, I think that you're above average. I think most of the people that listen to a podcast like this, I think they're above average, and I mean that. I'm not placating anyone or patronizing. But I do remember that. I don't remember how we connected, you and I, but I do know that you, and you live in like East Texas. I'm 20 miles south of Fort Worth, and I know that you met Nelson several times because back in, when I discovered this idea, read Nelson's book and went to meet him. We began hosting him in North Texas, 1 to 3 times a year, and we did that for 15 years or so before he, quit traveling and presenting his 10-hour seminars. And I know that you made the effort. You drove. You spent the night in hotels. You paid the money to attend and made the effort to attend at least 2 times that I can remember, maybe more. And so that had to have helped back in the day when you discovered this. And 2, back then, didn't have all of these videos on YouTube and all these different bastardizations of what Nelson did. And there wasn't a lot of books. So, I mean, if we go back 6 years, right? Did you say 2014? Is that what you said?
2014, yeah.
Okay. So when you discovered it, there was Nelson's book. He didn't have he probably did have a second book out by then. And
yes.
Okay. But he was doing his 10-hour seminars, and you went to a couple of them that I know, and I know that there wasn't as many things on YouTube as there are now. So
right.
You had to make a little bit more of an effort than most of us, I think.
Yeah, James, and I think going back to my background, I forgot to mention this. I'm very skeptical, and I'm very
perfect.
I'm very research driven, and so I want people to know as well that I researched this, trying to find ways that this was not what it looked like from the surface. It wasn't what it claimed to be. So I was kind of I'm out to prove this is not what they say it is. I was setting out to prove that this thing was not as great as it claimed to be. And so going into that, at that time, there were not a lot of YouTube videos out there on this stuff other than your quote unquote talking heads that people see every day. I'm not going to mention any names, but hey, buy term, invest the rest. I know that that's a very common thing that I would come across. Life insurance is a scam, whole life. So there was a lot of stuff out there against it. It was easy to find that, but
sure.
Yeah, I did put in the work. I put in a lot of work, and I think me and you talked for probably 8 to 10 months before I went ahead and got the policy, and it was just me doing my due diligence. I mean, it was. Man,
I must have had more patience back then, Adam.
I think you did, James, because you were great. You answered all my questions. There was no pressure there, and I appreciated that. But no, you're right. I did go to the seminars. I went to 2 of the seminars. I went to one in Fort Worth, went to the one in Alvarado when you guys first opened your new office up. And I'm not talking just, hey, I'm running down the road. I'm talking 5-6 hour trips. At the time, I was living in Austin. The second time, I was living in East Texas. So we're talking, commitment of let's go and hear what these people have to say, and learn. Once I felt that I did have something here, and you guys were onto something, and I couldn't disprove what the claims were. I said, hey, I want to learn from the source, and I know you were right there with him, and I've enjoyed working with you guys and learning everything about the process.
Well, I appreciate you saying that. I know you and I have talked over the years about different content that we're trying to create and make available to our client, like client-only access content, just to be a resource, have a resource for clients to access at their own time, on their own schedule, because we're all swimming upstream. When you start talking about high premium life insurance, man, people look at you like you're weird. They question your intelligence. They question my integrity, and it gets to almost like a Stockholm Syndrome. You don't even want to mention what you're doing, right? Because it's viewed as such just a terrible thing to do. But I too also I see that kind of changing somewhat. I mean, not that the infinite banking is making great thresholds across the country compared in the last 6 years, but it is making progress. And I believe, and I tell my colleagues at the Nelson Nash Institute every opportunity that I have, you better improve. You better get ready, because there's a wave of people coming, and you have to be schooled enough to help them intelligently and efficiently. Because I think I think we're going to be overwhelmed personally as a movement, as an advisor, an agent that practices the infinite banking concept. I think we're going to be overwhelmed.
Yeah, and I agree there too. And it's funny that we're having this conversation now because you've got a catalyst at this point where people are scared. People are looking at these markets and these traditional investments, and you see what's happening. I'm not worried. I'm not worried, and I like that. I'm not panicking, and I'm not sitting here looking at 401ks, and I'm not looking at my stock investments and being worried about that because I've got my stuff elsewhere. And I don't want people to think that I'm looking at this life insurance as my investment. It's not my investment. It's my warehouse of wealth. And if you're new to this, call James. He can talk to you about that, about what this warehouse of wealth term is. And we'll go over some of the projects that I've used this money on as my investments.
Yeah, I can't wait. Let me interject here. Today's March 19th, 2020 is why you mentioned the environment. The markets have been melting down for the last week and a half. It's down 30. Yep. And I think America is the greatest country in the world. I think we can outproduce them. We can outsmart them. We're more efficient. And damn is everybody, every other economy around the world. And I think that we're going to be just fine. This is just another variation of things that have gone on for centuries, right?
Right.
Just another interesting way the markets are going to melt down and our rights and our freedoms are going to be eroded. And then we're all going to pay the cost. We're going to, publicly bail out all these large corporations, and they're going to be subsidized from the taxpayers.
Right.
And I don't mean to take a side note, but currently, I got to say, my wife, Jana, and my daughter, Riley, are out of town. They went to Grandma's house, right, for spring break. And so she baked a bunch of stuff, Adam, right? I've got enough food to feed an army, right? I can't even eat it all. Like I'm going to starve to death because she's gone a week. But I've been going to local restaurants just to eat locally and to buy food and tip the servers and just to spend money locally. You know what I mean? So I digress, but that's why I'm glad you said that you're not panicked about where your money's sitting. And then let me say one other thing. I had a client call last week. It was so funny. And he's a friend. Your clients become friends. You get invested.
Absolutely.
It's all emotional.
Absolutely.
And he said, James, I'm calling you because I know your clients aren't melting your phone down because they're not losing money. So I just wanted to call you because I know your phone's not ringing off the wall. And I'm like,
absolutely. Yeah.
Thanks for calling. All right. And then too, the last time we spoke, I don't remember, maybe a couple of months ago, we were just talking. I don't even remember what initiated the phone call, but you at that time told me that you were going to build a house, right? And we kind of walked through that, and then I want to be brought up to date on that, and I didn't want to go into great detail since then because I want you to share it now, right? So tell us what you've been doing and how that's going.
Well, and I want to tell this story from the perspective of, I don't want to get in the weeds, but I want people to understand what I've been able to do with this Banking with Life program. James, the first thing that I was able to do was buy a family car. All right. We had the policy for about 2 years, and at that point, we were able to pull enough money out. We financed our own loan. We bought a family car. We have since paid that off with interest. And so I said, man, this is working. That was our first test of, let's put this into practice. Let's see if this thing can do what everybody preaches. And so we did that, and it was great. I said, hey, I recouped that interest. We've got a family car that's paid off a lot quicker than it would have been if I would have been at the bank. And I kept that interest, not the banker. The second thing that I was able to do was the company that we now run, family business, we're in construction. We had to buy a piece of equipment, a skid steer. We were going to go to the bank, and I said, whoa, hey, let's put this thing into practice again. Let's
I remember that.
Yeah, I called you and said, hey, what do I need to do? Let's get this thing set up. And it was a very simple process. There's no qualifications. There's no forms that you've got to fill out. I mean, it was a quick, simple. We needed it quickly. We got the money out of my account quickly. We bought this piece of equipment. It has since been working and making money for us. The company paid me back that loan with interest. And
I got to say, too, it's pretty interesting, though, that you have the opportunity. You're working with your father,
correct.
Right?
Correct.
I mean, there's a whole story. We don't have to go into that, but just from my perspective from the outside looking in, I mean, there's a tremendous value in that. Your
right.
dad, I'm speaking not for you. I'm just from the outside speaking. I'll bet you brought new energy to the projects that he was involved with. I'll bet you that y'all are doing projects that he would not have done on his own.
Correct.
And I'll bet you've given him a whole new perspective and a new wind in his. Not that. I'm just saying. I'll bet you that's a fact. All right, as a father and a son.
No, it is, James, and I think a lot of that has to do with the flexibility that we had to get this new equipment. He's always been the type that, son, you pay cash for something. Yeah. We don't have the cash right now. Let's make the work happen, and then we'll buy something. And I was more in line with, let's get this piece of equipment to where we can do this new work. And so it opened up a large opportunity for us to break into a sector of work that we had not done previous.
I love
it.
And
there was no, going to the bank, explaining to them what we were trying to do, and them wanting to look at 3 years of tax filings and all of this stuff that he dreads as a middle-class worker that doesn't want to deal with the bank. He grew up with, you save your money and you pay cash for it. And he's not a debt person. He's not a loan person. It's, hey, son, let's just work hard and we'll pay cash for when we need it. And so this opened up an entirely new opportunity for us. And since then, the company has paid the equipment off. We've got a new piece of equipment that we run and we get new work with. And it has just been a major blessing. And then on top of that, that loan got paid off. So now we're sitting here. Everything's paid back in, and an opportunity comes up with some land down the road from us that's a great piece of land. It's highly developable. It's in an area that the school is very highly sought after. There's just not a lot of construction going on. So I saw an opportunity there, got a policy loan, bought the piece of land outright, and have since started building a spec home on it, all with the money that was in my life insurance policy. No banker, no, guy in nice suit and tie coming out, walking around on my job site.
Telling you their timeline.
Right. Trying to tell me what needs to be done and when, and holding that money hostage. Yeah. Saying, well, when you finish this, you can then get the funding to move forward. Yeah. Anybody that's built a home knows that sometimes those timelines don't line up and they don't work. So just cutting that entire piece of the process out has been a huge blessing. We're about, I would say, a week from total completion. The house is on the market.
Really?
So, I mean, it's one of those things that when that house is sold, that loan gets paid back with interest. And we'll do it again. And so At this point, we've got a banking system in place at this point that we can basically use over and over and over, regardless of what the situation is. New equipment, new car, another spec home, another piece of land that becomes available. And it has just been an amazing process for me to see in person how it's gone from that first payment, a monthly payment, and thinking, man, it's just going to take forever. And hey, I'm going to tell you, it's not instantaneous. It's really not. And I don't want people to get that impression. I'm 6 years down the line at this point. But I will tell you, 6 years goes very fast in this. When you're doing what I'm doing, 6 years goes by very fast. And if you're diligent and you're disciplined and you continue to follow the rules, and there's a bunch of rules, but hey, the rules are there. and I'm not going to go into that, but don't steal the peas and all the rules that come along with these policies. It's so much better than following the rules of bankers that are basically there to skim off the top and make money off of you.
Yeah.
And,
let's
make you jump through hoops. And as a military person and as a business owner, I got tired of jumping through hoops for other people, and this allows me to jump through less of them. I'll put it that way.
Yeah, they're your own hoops. So let's talk about Nelson's 4 fundamentals briefly, because they're so simple. They're so straightforward, and it's not a get-rich-quick scheme of any kind.
Right.
And it's not about interest rates. It's about who's controlling the banking function in your life. And the capital stock of a bank is money. Okay, so
right.
If you look at banking, if the root word is bench, right, because the money changers worked off of a bench in history, ancient history. And banking is nothing but the movement of money. Right, deposits, right. Withdrawals, loans, loan repayments. So who's controlling the banking function in your life as it relates to you? Because banking exists. So I appreciate you sharing that, because when you look at a life insurance, you consider paying premiums to life insurance. It's like, oh my gosh, there's a umpteen years out into the future on an illustration that I've got to make this commitment to pay these premiums to, and it's going to take forever. Well, how old is your youngest child, Adam?
He's 5.
5. How fast did that last 5 years go?
Oh, I don't even have to answer that.
That's right. Everybody who has a child or a dog or whomever, whatever. The next 5 are going to go faster.
Right.
Right. And that's not going to change. So I love the way you said that. You're not going to get rich quick, but you piled up cash quicker than you expected.
Oh, absolutely. And since you bring that up, I do want to say this. I would not have the amount of money at my disposal right now if it were not for this program. I will guarantee, as disciplined of an investor as I am and as disciplined with savings as I am, I would not have the amount of capital at my disposal right now without this program.
Yep, I appreciate it.
Full-blown, honest answer. Would not have it.
That's right. And look, I understand in the infinite banking world, in that footprint, we diminish the death benefit, sometimes way too much. There's power in the death benefit. There's Absolutely. So many, you can't buy life insurance without the death benefit. But once a policy is in force and there is a death benefit that didn't exist prior, you might not have all the cash value that you want, right? But there's a death benefit. I know when I changed my life insurance back in the day, I bought more life insurance or had wound up with more death benefit practicing banking. I don't care who you are, you like step a little taller, feel a little bit more proud of yourself, like you're doing the right thing. If you're a family person, if you have debts and obligations, you have a responsibility, right? Whether you're living or you've graduated. So I'm just saying you can't discount the death benefit too awful much, right? And even though we try to do that in the banking world too much sometimes. And then systematically paying a premium. And I've been in the financial world for 30 years. They used to say, oh, well, it's forced discipline, forced savings. I don't really care what kind of terminology you use, but you're developing a habit when you pay premiums. That's a habit, right? And if it doesn't hurt, you're probably not saving enough money, paying enough premium, or putting money anywhere that you own and control. And it's a good habit to have your whole life. I have clients that are in their 90s and they still save money. And savings is almost ridiculed in the financial world today.
Well, James, it absolutely is, and there's no reason to do it traditionally. And that was one of the big reasons that I liked this program was go to your bank and ask them how much your savings account is paying you. It does not make sense. And I see why this culture and this generation is not big on savings, because there's no incentive to save, and they don't. Sure. And when I say they, big brother, government, the financial elite, whoever you want that they to be, but they don't want you saving money, because people with savings are people with power. They're people that have control over their lives to a certain extent, financially at least. It's not beneficial for the banks to pay you to save money. They want that loan to go out to you. They want that interest to come back to them. There is no reason for people to save in the current environment that we're in. Now, I'm not saying don't save money. I'm saying that there's no incentive traditionally to save. Sure. And that's why this system that you're talking about with the whole life policies, there's so many benefits to it other than the savings of capital. There is the death benefit that you spoke of. It's just, and there is an incentive to pay that premium and to build that capital and to be able to finance your own life versus putting money in an account that draws 0.5% and then you go down there and have to pay them 8% for an auto loan. Yeah. I mean, that's a pretty good spread. I mean, these people are getting filthy rich off of people's, I don't want to say ignorance, but the lack of education financially.
And their dependency, right?
Yes,
because we're born into the financial construct of, we're all debt slaves. We were born into it, and we're dependent. And the borrower, is servant to the lender, no question.
Absolutely.
So if you don't have any money, you're not going to do anything in life worthwhile without money.
Right.
And if you don't have any, you're going to be dependent upon someone else for their approval and your access to that capital. And that's exactly what this solves.
Well, and James, I'm constantly telling my kids, I mean, they're 5 and 7, but it's that dear to me that they understand. When we go swipe a credit card, I tell them, hey, remember, every time you swipe a credit card, Daddy's got to go work an extra hour, okay?
Ooh.
Or 2 hours, or I want them to correlate. I want them to correlate that when you swipe a credit card, that is work that has to be done. I also make sure to tell them, hey, we pay these credit cards off every single month. We don't carry balances. I mean, these are on day-to-day purchases, but they will understand. Just like what you were talking about, the person that's in debt is enslaved to the debtor. I mean, it's when you've got a loan out, you've just guaranteed for whatever amount. You've just guaranteed that you've got to at least work that much longer and or come up with some other way to pay that back. That is not a give me. That's not a freebie. I mean, it's something that entitles you to more work. It entitles you to continue working for them. And so that's what I try to explain to them debt is about. And so with this, we have eliminated all debt. We have zero debt. We do not have a mortgage. We do not have car payments. I'm able to build spec homes. I'm able to buy equipment for our company, all without going to the bank and going in debt. And that's a very empowering and a very freeing feeling. It's like my dad always says, son, don't get into a position where you have to go to work. If you get hurt, he said, we can shut down and we don't have to keep this equipment working to pay it back. That's why they were always against going in debt. Now, hey, there are people out there that are going to explain how certain debt is good. Hey, to each their own. But I want to be in debt to myself. And this program has allowed that. If we do have to go in debt, I look at it as we're in debt to ourselves. And I'm not going to go into the payback features of these plans. I'm sure that you've got videos on that. But, hey, it basically boils down to you make a payment when you can, if you can. I tend to do it a little differently than most. I think most would need to be disciplined enough to set up those repayments. I do it all in lump sums. We go out and we buy a piece of equipment. The company worked for a year. I took the money that equipment made and I lump sum paid my loan back.
Wow. The banker gets to do whatever he wants, right?
You get to do it, and that's why I love this program. This home, I'm not making monthly payments back to myself on this spec home. When that spec home sells, lump sum pay that back with interest, and let's move to the next project. But it's just the parameters and the guidelines and the rules have changed when you bank with yourself, and it's amazing. And I don't know what else to say about that. I mean, it's freeing to get away from the banking system.
I agree. Listen, I got a question. I don't know if I've asked you this before. I can't remember. If I did, I forgot. And so my apologies if I'm asking again. But Nelson used to say, because Nelson was a forester, right? He bought timber, his real estate. And he's financed heavy equipment. He's owned heavy equipment. He owned it in his lifetime and financed it. And he used to say that equipment cost $1 a pound when back in the day when he was buying equipment. And then in the seminars that his 10-hour seminars, I think he said it got up to, it was $10 a pound. And that was probably 10 years ago. What does that equipment cost? I mean, if I don't want to know the price of the equipment, my question is, those big old D9 catch or whatever piece of equipment, is it $1 a pound, $10 a pound, $100 a pound? What do those bad boys cost nowadays in general?
James, it's definitely not $1 a pound, I'll promise you. I would say that I'm just sitting here thinking you're probably pretty close at $10 a pound. We've got about a 15,000 pound tractor that if you went to go buy it brand new, you would probably pay $150,000 for it. So I would say the $10 a pound is probably pretty accurate. So
that's about right. Yeah.
Yeah.
I just wondered,
Yeah.
All right. So your spec home, is it going on to the market pretty quick? Did you say
it is on the market right now?
All right. Well, how's the market out there? I mean, around here, it's not lasting very long.
No,
properties aren't lasting long on the market.
No, and in this school district that we're building in, and there were a lot of factors into why we built where we built that. There's a high demand and there's not a lot of supply at this point. So we've had numerous interested parties. It's been on the market for about 2 weeks. In Austin market, where I used to live, that would have already been a sold property. Up here in rural East Texas, the markets are quite a bit slower. But generally, if this thing moves in the next 30 days, that would be about average. And by it not being fully completed yet, there's a lot of people that they have a hard time committing to something that they don't get to see the full finished product. So sure. I would venture to say that within 2 weeks after the thing is completed, in about another week, we will probably have it under contract. Now, obviously, the environment we're in now, people are kind of pulling back quite a bit because of the coronavirus and all of that stuff. So I would envision that it might take a little bit longer. But in general, it's a pretty hot school zone and not a lot of building going on and a lot of people trying to get to that area. So I don't think that it's going to take very long to move the property. So
well, you don't sound worried about it at all.
No.
And so when this one sells, are you going to do another one?
Yes.
Or do you know?
Yeah, we've got 5 more to do.
Oh,
and so,
perfect.
I've had a lot of people, bankers. I've got some buddies that are bankers that, they've offered their services. Hey, man, it's always cheaper to build 2 of those at a time. All these contractors, hey, it's cheaper to build 2 at a time.
Yeah.
Traditionally, maybe so. But I can tell you that with recouping the finance aspect of the build, if I can only build 1 at a time, which that's all I'm able to do right now with the funding that I've got, it still benefits me more to build. And I've run all the numbers, trust me. It benefits me more to build them 1 at a time with my own financing than it does to go to the bank and try to build 2 at a time.
Yeah.
So we're just going to onesie 2 or 1 at a time until we're done. We've got 5 more, and hey, we're just going to keep rolling with it.
I love it. Well, I don't know. I would think that the second one can happen in a more timely manner, and the third one, I mean, if the weather and all things being equal,
right.
I mean, this is the first home you built, isn't it?
Correct.
So, I mean, you're getting an education and an experience. It could be rolled up into the next one and the next one.
Oh,
absolutely.
The next one. Absolutely. Getting lined out with the right subs and knowing the process from start to finish, everything will only get more efficient as you move forward. And I say that we haven't run into any problems with this build. The subs that I've used have been great. I've got a guy that he's built homes for 30 years, that he's one of the subs that is basically overseeing the build project for us. Mm-hmm. And it's just gone very smooth. And I would say, this is not a lecture on how to build homes, but the availability of the funding that I had through through the life insurance policy is really what made this possible. There would be no way that I'd be doing this right now without that funding.
I love it. And so your dad's involved with you when you say us and we? Yeah. I love that. I love that. My youngest son, Jake, works here with us. And I mean, that's incredibly valuable. That a lot of time, I'm not saying you, but a lot of time we overlook or discount the value of working with, our children and our parents, right?
Right.
And then, too, I got to go back and say my youngest child, Riley, she's 12, and from a very young girl, I like silver, I like coins, old coins, French, English, German, thalers, all kinds. And I'm saying this, that we've talked about money and cash flows and saving and banking from a very, very young age, right? Mm-hmm. But we used to get a white piece of paper and put a coin underneath the paper, and then you do a sketch with a pencil, and I don't know what you call that, but the image of the coin transfers to the paper, right? And it just, she's very artistic anyway, and so you get to learn about money and coinage and artwork, and I want to say that like 100 years ago, a 1 franc coin, right, or even a 1 pound coin, it compared to a 5 franc coin 50 years ago, it's the same size coin, but the value has gone down. Like 150 years ago, I don't know how big these coins are, but they're worth 1 franc. The same size coin is now 5 francs, if that makes sense. No, back then it was 5 francs. Now it's 1 franc. And I'm just saying there's so many ways to teach children about money and value. I never thought about every time you use a plastic card, Dad's got to commit to another hour of labor, because that's really all money is a store of value. We've worked, we've exchanged our time, effort, energy, talents, God-given abilities to accumulate this income. And then, I'm not trying to give an economic lesson here, but I'm just saying that every time you spend money, you're spending real assets or future production. That's
right.
I love that. Thanks for letting me share that. I'm gonna incorporate. My friend Adam says that now I've got to work more hours every time you shop on eBay or Audible or
you got to be careful though. Sometimes they might go to swiping a little bit more.
Yeah, Daddy, you're hanging around too much.
Yeah,
you're making me work too much, so you got to go.
Yep.
That's funny. All right. Well, anything else you want to share or cover, Adam?
Yeah, James, there is a few items, and it's some stuff that I'd like to pass along. That through the 6 years, I keep telling myself, and it helps to keep me on guide. And we talked about earlier that there wasn't a lot of YouTube stuff out there, and I'm not going to take claim, but I remember at one of the first seminars that I went to, I came up to you and I said, James, man, it would be great if you guys had content online to where when I forget all of this stuff, I can get on there and I can review it. And that's exactly what you guys have done. And I'm not saying it was because of me, but I think that you did feel a need and fill a gap there for a lot of individuals that at the time that I got into this, there was a lot of 6 months later, you start wondering, did I do the right thing? Yeah. And I would have to call you up, James, how did this work again? I saw this online that says that this is the much better investment. Why did we say that was not the better investment again? What did we say, that this policy did better than that? And so I think that you guys absolutely, regardless if it was me asking that question of you, maybe there was multiple clients that were saying that, maybe you guys just saw the gap, but the YouTube videos and y'all's education that you're putting out online right now is very much needed, and I think you're filling a huge gap, and you're supporting your clientele in a way that keeps them positive and educated and actually learning more and more about these policies. And so I want to tell people, it is normal to feel that, did I make the right decision? Am I doing the right thing? Because here's what's going to happen. You get one of these policies and everyone around you is going to say, man, you're crazy. You bought life insurance, whole life insurance. Why did you do that? And you start questioning that. So now everybody has at least something more than I had in James's videos that you can go back and basically re-educate yourselves on the decisions that you've made. And I will just say, stick with it. Do not give up on it. It takes time. One of the things that James said early on, and I know you'll remember this, James, is that, hey, it's like starting a business. You don't start a business for free. Yes, insurance company is going to make money. Yes, James is going to make money. His staff is going to make money. There is a startup period to these policies. There is going to be some time that you have to sacrifice before you're able to utilize these policies, but it is well worth it. And James is well worth it, and his staff is well worth it, and the insurance company is well worth it. That is not James paying me to say that. That is an honest statement. I've got a lot of people that say, man, I can do better in the stock market. So this is my tip number 2. Do not forget this. Do not forget this. The life insurance policy is not your investment. The life insurance policy is your warehouse for wealth. It is where you store your money until you have an opportunity to do better than what the insurance company is providing. Now, that being said, you are much further ahead in life having your money stored at the insurance company. Trust me, I've run the numbers. I'm not going to sit here with a diagram or an Excel spreadsheet and show you these numbers. James gets paid very well to do that. But
don't put that on me. I don't want to. I don't want to run an Excel spreadsheet.
Hey, and you have gone over illustrations till we're red in the face.
Yeah, that's true.
But my point is, it's worth having your money in this policy versus in a savings account versus somewhere else where there is a multitude of advantages. You've got interest rates that will beat any savings account. You've got dividends. You've got life insurance coverage to where if something did happen to you, you are still covered. And then when you do find the right investment where you think you can make a 10, 15% lick, pull that money out, invest that money. When you made that money back, put it back in your account with interest. So I get the argument from a lot of my counterparts, and I'm not going to call him out, but he'll see this video. And he'll
No
know
names.
he'll know exactly who I'm talking about. And I'm trying to get him to call and battle you, James, because he's not hearing the benefits here. But I get these.
Listen, you said I get paid well. I don't get paid that well.
Well,
to battle these. But go ahead. I'm sorry. It's fine.
But no. It's one of those where you contend with people that don't understand it, and he has still not understood the point of, Adam, I can buy term and invest the rest. He said, man, I love playing the stock market. And I said, man, that's great. Yep. I said, but you can play the stock. I can play the stock market with you. I'd pull my money out and let's go make 20% if we think we can do that. So it's not the fact that I'm trying to get him to understand. I'm trying to get people to understand, and I'm sure you battle this same thing every day. The insurance policy is not the investment. It is in a certain respect. It is. I look at it that way, but I also look at it in a way that if there is a better investment out there, i.e. I can build this spec home and make X amount of dollars or X percentage return, I'm going to pull that money out. I'm going to take part in that investment opportunity, and then I'm going to put that money back. And
look, and you're building a home for a family. A family's going to buy a home.
Right.
I mean, that's the basis of capitalism.
Right.
Absolutely. I love that. I love that. So
those are some things that I want people to know. These are struggles that I had initially because this is a different concept. This is a I'm not going to say a new concept because Nelson Nash has been doing this before I was out of diapers. But it is a new concept financially that we're not teaching students. We're not, and not just students, but most adults don't understand this concept because they've heard so many times from conventional investment gurus that, hey, life insurance is bad. Life insurance, hey, buy term, invest the rest. I mean, this is not sound advice. This is not people that have investigated as thoroughly as I have with James, and James even more than me. I mean, he's the expert. That these life insurance policies set up in the specific way that you guys set them up are superior to anything that I have found out there. Now, I'm not saying that the Wall Street guy that can go out and shark people out of their money, invest in day trading, I'm not saying that hey, maybe that guy can do better. But for your average person like me, I'm a conservative investor. I want to preserve capital. I want to have the opportunity to jump on investments when they arise. This has been perfect. It has performed exceedingly well. It's even exceeded my expectations that James outlined in the illustrations. I look at my yearly annual reports that come back. My policies have exceeded anything that we ever put together, James. And it's
because of what you've done.
It's because of utilizing these policies in the correct way and paying yourself back with interest.
That's right. You're just being your own banker. Great example. I mean, I appreciate all the kind words too. What is all of that worth, right? And then you can't put the value of that on a life insurance illustration.
No.
You can't put that on a spreadsheet. And let me say that I don't have a specific report to cite, but I've heard umpteen times over the last umpteen years, the average day trader in America loses 6% a year. All right, they don't talk about that. It's just It's like the average real estate investor. They'll discount their time. They don't want to take into account their time, and they only want to talk about the 20% year-over-year returns. Well, listen, man, I know plenty of real estate investors that have lost more than 20% in a year, and it takes them, especially if you're an investor and you have a portfolio of properties,
right,
and you're going to do cash out refis, equity harvesting, whatever terminology you want to use, right? You're just banking with real estate, right? You're collateralizing property. Okay. Now, if you have a portfolio of 100 homes and you go to the banker, he's not going to give you, 20% loan to value. Now, It's 50-50. And then you got to cough up all the pro formas. And then that banker is going to take that loan request to his loan committee. And there's a pecking order of what gets presented at the bank's loan committee. And my whole point is that if you don't close on that loan in a timely manner, you're going to have to cough up new pro formas, right? And you do that 4 or 5 times. You have all that property, all of those cash flows, and you're going to the banker with your hat in your hand, and they're dictating to you how, when, and why or why not you're going to get money. And it's like, take all that you want. If that's the life you want to live, I mean, you have every opportunity on a daily basis to live that way. Right. If you want to become your own banker and practice the infinite banking concept, this is worth investigating. And man, if somebody can't listen to this episode and listen to you and get motivated to at least buy a book and read a book, then I can't help them. You know what I mean? No,
and we my buddy and I we have a 2-hour drive that we commute every weekend to go check on oil wells in Louisiana. And so we get to have our back and forth. We talk stock market, we talk news, we talk oil, we talk investments. Me and him basically got into talking about insurance. They were buying some insurance for some employees at work, and I kind of started in on the whole life insurance and the infinite banking, and man, it's like a switch got turned off with him, and he's, we're just going to buy the term, this, that, and other. And I said that exact thing to him. I said, Kyle, if you're not, well, he knows who I'm talking about now.
Oh, no, I'll edit it out if you want.
No, you can leave it in. I didn't use a last name. But
all right, Kyle, we love you. We're just using you as an example. All in love.
That may or may not be his name, but what it came down to was, hey, if you're not opening up to hear the argument, if you don't even want to hear it, if you won't even entertain it, let's change the subject. there's nothing to talk about with someone that is already predetermined what they're going to think about a topic, or predetermined what something is or isn't. And so, you're absolutely right. You're not, and that's not who you want to work with anyway. I'll tell you that right now. No. As the business owner that goes out and does work for people, I can judge very quickly if I even want to work with this person or not. And that is something that I enjoy about the financial position we're in right now, is that I don't have to work with people that I don't want to work with. And, they have to be open, and they have to be trainable. They have to be open to education. They have to not be shut down to new ideas. And if you then you have to move on.
Yeah. That's a whole new perspective in business, isn't it? When you don't have to work with people you don't want to.
Absolutely. If we were deaded out and we had loans to repay and all of our equipment's going to get repoed if we're not working, man, that doesn't give you a whole lot of leeway of who you want to work with. I mean, you pretty much have to take any job that comes down the pipe. So in this respect, hey, if it's somebody that you just don't feel like you're going to be able to please no matter what you do, hey, I can walk away from that bid. And I've done it, numerous times in the last several years. So it's a very, like I said, it goes back to, it's a very liberated feeling. And I don't want to get too emotional, but I mean, it very much is. And I think it gets better and better with time. It really does.
This is a very emotional, Ryan and I have talked about that. This is very emotional. We're talking about money and families. People, if they don't have loved ones, they don't buy life insurance. Just the mere fact of owning life insurance is because you care for someone else. So, and it's very emotional, when you're talking about money and income, and it's very emotional. So, but I appreciate that.
No, it's something that's very central to my family. And I'll be honest with you, James, I probably am doing this less for me and more for my kids. I am a gold guy. I'm a silver guy. I mean, I've got those investments where those kids of mine have gold and silver accounts where every month I'm buying physical gold and silver, and we store some here. We keep it in certain accounts online, but it's physical gold and silver. And we haven't touched on this part, and I'm glad you brought it up, but it's legacy building. I want to leave something more for my kids than was left for me. And this life insurance policy, is one part of that. We could talk trusts, we could talk life insurance, we could talk, physical gold and silver. There are many aspects that you can talk about, but I think that this life insurance policy, this infinite banking concept, is a legacy building component that is in with a large amount of other things that I've got going on. So it is one part of it, but I will tell you, it's probably the central part of that legacy that I want to leave behind for my kids.
Yep. If I was in East Texas, I'd be buying whiskey, tobacco, and water filters too. I'm just saying. But that reminds me that I think one of the most senior clients that I have is in his 90s. All right, and he's been a client a long time. I don't know, 10 years, something like that. So he was in his 80s when he became a client. Okay, and we had a conversation, and he met Nelson, and he'd come and he'd listen to Nelson. But one of our early conversations, Adam, was he told me, he said, James, he said, I was sitting in my living room in 1964 watching LBJ on a black and white TV when LBJ said silver has become too valuable to use as money. He said, James, I knew immediately right then there was something wrong, and I've been buying silver ever since. All right. Now, fast forward to this is 2020, so somewhere around 2010, 11, or 12, he becomes a client, and he buys policies on his 2 adult sons. Okay. And he, like, many silver stackers, hard money guys, precious metal people. They consistently buy precious metals. That's what he was doing. Mm-hmm. And what he did was he funded life insurance policies, then took loans to continue purchasing silver, is what he liked. All right, now think about that. The only thing he did was create policies. They used his son's lives for the insurability.
Right.
He owns them. Right. He's the beneficiary until he graduates, and the ownership is going to transfer to his boys, and he still bought all the silver that he wanted to buy.
Right.
I mean, it doesn't matter what you're doing, in my opinion. You can, if this infinite banking concept makes sense to you, you can integrate it into everything that you're doing and make everything that you're doing even better. Okay.
And James, if I can jump in right there, I think that we've covered this in a couple different ways, but it comes back to when people are comparing the insurance policy to the investment, they're doing it wrong. You're not comparing apples to apples at that point. And what that guy was doing is exactly what I'm doing now. He's still buying the silver that he wanted to buy, but guess what? He's doing it with an insurance policy now. Nothing has changed for him. And that's the same thing, that it's hard to grasp that concept that with these policies, you want to put as much money as you can comfortably put in. Now, I will say comfortably, I kind of say that with caution, because sometimes it's not comfortable. And that's Perfect. How I know. And that's how I know that I'm putting the right amount in there, because sometimes it does feel uncomfortable. But guess what? That dude was pulling that money back out and doing exactly what he was going to do with it anyway. But guess what? He's backed up with an insurance policy now. And that's why comparing the actual policy to a specific investment, you can do it all day long, but it's not really apples to apples, because I'm going to take that money out of that policy and I'm going to buy that same investment that you're trying to prove to me is better. And I'm going to say, yeah, you know what? I reap the benefits of that investment as well. And guess where I'm going to put it back in my warehouse of wealth, in my insurance policy. And that, I think, is the hard part for people to get over, is that they can still invest in whatever it is that they're comfortable investing in, or they can leave it in their warehouse. Now, you can go back to the silver talents and the parables of, if you don't invest money and put it to work. But my thing is it's safer and does better in that policy than anywhere else. But if that investment opportunity jumps up, you've got a way to get that money out and take advantage. Now, if you lose on that investment, that's not the insurance policy's fault at that point. But if you can beat that insurance policy's returns, then do it. And that's exactly what it is designed to do. And Nelson preached that. Nelson never preached. I was at 2 of his seminars, and you had a relationship with him way more in depth than I did. But he never preached, don't take the money out and use it. I mean, this is something that the money is there. You need to put it to work, whether it's buying construction equipment or forestry equipment or investment land or cattle or whatever it is that you're into that you think that you can make a good return on. That is what that money is there for. And until you're ready to use it, it is at least doing better and providing you with advantages that no savings account or 401k is ever going to provide to you.
Yep, I agree. And to be clear, we were just capitalizing the cash values, right, by guaranteed contract.
Right.
So the money doesn't actually come out. It's there compounding, earning dividends. And then I have a friend, a colleague that he said many times that when people compare, it's always compared to what? There's compared to what? The life insurance compared to what? And life insurance is not an either or asset. It's not like I can have life insurance or the silver, life insurance or the spec home, life insurance or the retirement account that's going to produce passive income in retirement. It's an and asset. There's no question about that. I can have the life insurance and the vacation and the education and the equipment and the automobiles and That's very powerful, and that people do have to, it's hard sometimes to wrap your mind around that. I mean, Nelson accurately named it infinite banking concept. And the concept is an abstract idea. So you got to spend time to understand. You got to do your homework. You got to do your vetting. But typically when life insurance is quote unquote compared to an investment, the comparison is typically the investment. There's zero guarantees in an investment.
Right.
So you're comparing against the best case scenario, and then you're comparing it with life insurance that is wrought with guarantees, right? And then there's a worst case scenario, and you're going to come out ahead in the worst case scenario in life insurance. So you're exactly right. It's not an apples to apples comparison. As a matter of fact, it's not even a correct construct, in my opinion.
Right.
Right. So if there's an investment or an opportunity, by all means, go take advantage of it and be profitable, right?
Right.
Yeah.
No, absolutely.
I appreciate you.
Absolutely. And I think that is the difficult part is, and you said it better than me, it is an and asset. You can have both. And so to argue, and I'll go back to me and my friend,
Tyler Johnson.
John. And it's not arguing. It is healthy debate. It's hard to get people to see outside of the box that has been put over them. And when you live in a system and financially things are done for a certain amount of time, a certain way, it's hard to get out of that mindset. So, hey, I'm not beating up on people that don't buy into this. If it's not for them, it's not for them. Right. It's hard, and even somebody like me that does put in the time to educate myself on this and try to understand it better and better. Sometimes, James, I pick up the phone and I call you and I say, man, can you explain this to me again? Why are we doing this? Because I don't do it on a daily basis, but I do know that with the amount of time that I've put into it, I can tell you that there's nothing else out there that I'm comfortable with and I'm fully appreciative to have this policy. And I think that my family's better for it, our business is better for it, and I'm doing investments right now that I would never be able to do without this policy started 6 years ago. So I'll just look out there and say, hey, start it now. If you have any aspirations of doing anything in the next 5 to 10 years, don't wait. Start now, because it takes that amount of time to build this business, and this is a business. And James, you can go over that with people like you've gone over it with me. This is a business. You have a back office. I look at this as that insurance company. I'm part owner in it. I've got a back office. James is my support. He and his staff are part of my back office. I am able to go through them to get the financing that I need. This is a business, and it takes time to build.
Yeah, it does. But you didn't wait 6 years. You mentioned earlier, I mean, you bought the family car.
Yeah, absolutely.
I forgot the second thing. You did the piece of equipment with your father. I love that. Yeah. Say hi to your father for me.
Will do.
And then the spec home. I mean,
this has happened in the 6 years. Absolutely. So I'm wanting to say it was about 2 years before we bought the family car. And hey, everybody, you can do the math out there. Hey, I didn't go buy a $50,000 car, and I'm not claiming that. We bought a gently used vehicle, affordable within our price range. I think just for everybody's sake, it was about $15,000. I'm not buying $50,000 cars. 2 years later, I did go out and buy a piece of equipment that was rather more expensive than that. And then 6 years later, here we are. And hey, granted, I'm paying all of this stuff back. I'm not buying this stuff, not paying my loans back. I'm putting that money back. And now here we are 6 years later, and I'm building a spec home. And anybody that knows anything about building spec homes, you're not building them for $50,000, $60,000. They are significant investments, significant costs there. And it did take 6 years for us to build that amount of value into these policies. But hey, it's 6 years. It's not 20, like a lot of people would think it would take. It's very doable. It's very very much within reach for average people with discipline to get into this program.
I appreciate that. You've been a very good banker. I wish everybody was like you. I'm just saying, I've enjoyed all of our phone calls. I answer the phone and make my return calls. I'm not available on demand, but I'm available to our clients.
Right.
And I've always enjoyed the conversations, and, I would rather spend time with people that are doing and truly learning as to arguing with people to justify this idea of, or this ability, And so, and that's really how I get to spend my day, is talking to people like you, Adam, that are getting it, doing it, and I can learn from you, right? We can all learn from each other, which is another reason I love live events. You get 100 people in the room, they're all doing 150 different things, and we can learn from each other. Iron sharpens iron. So I appreciate all the good comments, the nice comments, and you've done very well. You're very disciplined. And Nelson used to say, look, this requires discipline. If you don't have discipline, you might as well dig a hole, jump in it, and have someone else cover you up.
No, absolutely.
But it's worth it.
Hey, any investment strategy, this is no different than any other investment strategy. People have to have some sense of financial wherewithal. They have to know themselves. They have to know their family. They have to know their financial situation. They have to be disciplined. I will say that this, it differs not very much from, your 401k at work, because, hey, it's an automatic thing. Hey, this is the same way. But I will say this, in terms of the discipline part, this is far better than saying, I'm just going to sock it into a savings account, which we all know what happens when that first emergency comes around. You pull that money out, it's very hard to get that money back in there. With this, there is a structure in place that I love that is very similar to a savings account, and if that emergency comes, you can get it just as quick as you can out of a savings account. But guess what? There's structure, and there is repayment plans that help you to get back on track. You don't get that with savings accounts and CDs and anything else like that.
I convey it like this, that if you think of the idea of just saving money, right, that's a cash flow. That's a discipline. We're piling up money. And then life happens. The emergency happens, the unexpected, and then we deplete. We liquidate that account. And then the next time period, we're just saving up again, right? We're saving up again until the next life event or situation happens, and we liquidate that account. Where when it comes to life insurance, and there is a difference between a premium and a loan repayment, right? Mm-hmm. But we pay premiums, that's a cash flow. Part of that cash flow, premium, there is a cash value that's liquid that you can withdraw or collateralize, borrow against. Okay, now the life events happen. They happen all day long. Every day, right? Instead of liquidating that asset, we collateralize it. We borrow against that cash value. So we never interrupt the compounding growth, right? And now the next time period, instead of a replenishment of a savings account, we're making loan repayments. So my point is this, the cash flow is the same, whether it's accumulating savings or a loan repayment to the next event of liquidation or collateralization. So, and I think, quite frankly, Adam, I know we've talked about, you being a guest on this for some time. This, in my opinion, is an episode that people need to listen to more than once, right? Because you've covered an awful lot of ground, and it's good, solid, foundational, educational, and unscripted, not paid for, from experience. This is an episode that is worthy to be watched more than once. So that's my encouragement to the listener, or listen to more than once. Anyway, so thank you for
and I appreciate being able to get to share my experience, because, like I said, I can't go through all the ins and outs, and I get with a buddy of mine, and he wants to nail me point for point on, well, I can do this and I can do that, and I just don't have the ammo to technically be able to fire back on everything. And then I get home and I'm like, let me call James real quick and let's get these counterpoints. But no, it's hard for me, not being the guy that does it every day, to fire back these counterpoints. But I will say this: I'm not trying to counterpoint anybody right now. I will just say that I have had great experiences with this. This has been a great blessing for my family, for my business, and for investment opportunities that we're involved in now. I've got life insurance. I've got capital that is in a life insurance company. There are so many benefits here that they fit my investment style and my financial style to a T. And if it's not for you, it's not for you. I would venture to say that I don't know of anybody out there. I can't imagine anybody out there that would say that's just not for me. Because you can do whatever you want to with this. If you have an aggressive investment style, put it in the life insurance policy, get the policy, pull it out, and go throw it in the most aggressive investment you can find. You can do that. You know what I'm saying? You can do that. There is just so many aspects to this program that you can't cover it all here. There's so many things that I probably want to say that I'm going to forget. But I guess I just want to at least impart on people that are watching this that I've had a great experience. I've got to do things that I would not be able to do. It is a legacy building centerpiece to my financial strategy that my kids will benefit from. And I'm going to say this. I'm open to anybody that wants to present something to me that can do and beat what this thing can do. I will be open-minded to that. And I was open-minded to that. So
I'll throw your phone number out there and let them call you. I'm kidding.
X. but no, seriously, I am open-minded, and I don't want to. Sure. I don't want people to think, well, yeah, this guy's he's towing the line. You know, I am the type of person that if something came along that would beat this setup, I would first come to James and I would say, James, what do you think about this? And we would go over it. But I'm telling you, in my 8 months before I got the policy and in the 6 years since, I'm constantly in financial strategies. I'm constantly talking with friends that are bringing new ideas to the table. There has been nothing else that I've seen that compares to this, that has all the advantages that this has and will enable you to do the things that this policy can do. And that's just bottom line honesty talking, not getting paid to say it, not trying to convince anybody else to do it. I'm just telling you my experience with it. And if it sounds like something that would work for you, then I would strongly suggest that they get in touch with you and move forward. Don't hesitate.
Well, I appreciate that. And we're going to encourage them to buy Nelson's book, Becoming Your Own Banker, his first book, second book, Building Your Warehouse of Wealth, DVD, Banking with Life. And then Nelson has a 10-hour series at the Nelson Nash Institute, because the people listening are not going to have ever the opportunity in this lifetime to listen to Nelson Nash present his 10-hour seminar. And right. That is available. That pre-recorded 10-hour seminar is available at the Nelson Nash Institute. And so thank you for saying that. I'm just like you. I've done this 30 years. If there's something better out there, it's not like I'm sleepwalking, not paying attention. I mean, right. I pay attention. I mean, we're all swimming in noise. There's almost too much noise going on in the world. And this free flow of information is, it can be mind-boggling just trying to keep up with it.
James, can I say something real quick?
Sure.
Talking about the Nelson Nash, the seminars, the 10-hour seminars, I was able to go to 2 of his seminars, and I just want people to know that will get to watch his videos. That's great. It truly is great to see the source, to see the master that came up with this stuff. It's great. But I just want to tell people, getting to meet him in person, I try to get a sense of the people that I'm dealing with. And you can watch his videos and his seminars all day long, and unfortunately these people are not going to get to interact with him on a personal level in between the breaks like I did. And that was the biggest selling point for me, was his genuineness. You could sense his genuineness to help people, to educate people, to steer people in the right direction. You did not get a sense from this man that he was selling you something, that he was trying to force you to do something, to pull the wool over your eyes. There was none of that. This man truly wanted to help people financially, and that was his goal in life, and he was so sincere about it. And you don't get that in the video seminars. Yeah, there's a certain amount of his personality that comes out, but it's in between the breaks where you're conversating with this man and he's asking you questions and he's telling you about his life, he's telling you about his faith, he's telling you about his family, he's telling you about the hardships that he went through, and then he's asking you questions and seriously listening to you. Yeah. You got a room full of people, and this man can make you feel like that you're the only person there, and he's answering your questions, and he grabs you by the shoulder and the arm, and he is giving you advice like a grandfather. And I think you know exactly what I'm talking about. It's kind of giving me chills. But this was a man that truly cared for real. I say often that he was the most righteous man I'd ever met. Okay. And then I say all the time, he's the only man that I'd ever met that could talk to a room full of people, 250, 175, however many, and you genuinely felt like he was speaking to you individually because he was. Yes.
Yes. And that's unbelievable to me. I completely agree with you and understand it. And feel sorry. I mean, I don't feel sorry for him. My heart goes out to the people who won't have the opportunity to meet him on this side. They'll meet him on the other side. But I'll guarantee you, we're not going to talk about the infinite banking concept on the other side in the next life. We're not going to talk about, but he was, no question, he was a great guy, very good speaker. And I've never in my life seen an individual that could connect with a room full of people on an individual basis. I mean, Unbelievable. So,
yep.
I don't want to make the people that won't have the opportunity to hear him live in person feel bad. But the next best thing is, in my opinion, the 10-hour seminar.
Yes.
That is available. And so that's really, because I believe today, and I'm doing my part. My commitment to Nelson, to the Nelson Nash Institute, has always been to do my part. So I'm doing my part. But you can't speak intelligently about the infinite banking concept, in my humble opinion, unless you've heard him give and go through his 10-hour presentation and then read Becoming Your Own Banker and the second book, Building Your Warehouse of Wealth. You just can't. You can talk about it.
You need to read those multiple times. I still read them, and
absolutely.
And there's still questions that come up, and there's still, man, I forgot that. But no, I definitely agree. You cannot, unless you've put that time in. It's almost like you can't even refute it. Don't refute something that you don't know about. And I spent, the better part of a year trying to refute it, and I'm reading these books and I'm talking with you, and I was finding every reason in the world not to do it, trying to poke a hole in it, and here I am 6 years later. And I'm not going to say that I'm an evangelist on it, but hey, when the situation comes up, I tell people my experience, and sure. It's something that's very much benefited us. But absolutely, they need to read the books. They're not thick books. I mean, they're not 400-page, lecture books. They're very simple. They've got diagrams. They've got examples. I mean, it's very easy to understand. But you need to read those books multiple times, become familiar with it, and then ask yourself, can you beat this? And I think it's very difficult to do. I really do.
All right. Well, not to, put you on the spot, but looking back, what would you do different, if anything?
Looking back, probably, I was going to say, and here my honest, just shoot from the hip answer would have been do it sooner. But, I don't even think I would do that differently, James. I think that taking the time to do it and research it the way I did it That's just me personally. I have to do those things. I have to go through those steps to make those kinds of decisions. And I wouldn't want to ask and I know I've said this a number of times, hey, just do it, telling other people. But I completely understand if other people want to do the same thing that I did and take that 6 months, 8 months to educate themselves and ask those hard questions. James, I don't know that I would do anything differently. I think I would say this. If anything, if I could change anything, maybe make it happen 10 years earlier.
Right.
From the time that I was introduced to it till now, I would probably do nothing differently. Except maybe have a higher income and be able to put more into it. But I don't think I would do anything differently of the process that I went through. I think I'll go with that answer. The thing that I would change was all of that process would have occurred 10, 15 years earlier. Sure. I didn't start this till I was 32 years old. Man, if I would have done this at 22, at that time the policies wouldn't have been as big. I wouldn't have been putting as much in. But man, I would have started. And I think that you and I both know 10 years of a little bit is better than a lot later on because of the way the compounding and all of that stuff works. So that would be, I guess, my answer, that this would have occurred. I would have met you 10 years earlier. That would have been my answer.
Well, and I appreciate that. That's very common. There's typically about 4 things everyone says, and one of them is, I wish I would have done this, 10 years, 20 years earlier or whatever. We start dating ourselves.
Yep.
And I was 40, so you got a head start as far as age-wise, almost 10 years earlier than I did.
Yeah.
Yeah. And then, I'm 56 now. Whoever's listening at however old you are, that's where we're at. We are here. This is where we're at. And so typically, the way I phrase it is, once we are exposed to it, we've done the vetting, if it makes sense to us and we put it into action, man, we spend the rest of our time just playing catch up. Okay. What were we going to do anyway? 10 years is going to happen. The difference between now and 10 years from now, I don't remember who said it, Jim Rohn, Zig Ziglar, is people that you meet and the things that you read, your education. So the time's going to happen. You're going to be putting your money somewhere. You're going to be financing everything that you're going to finance anyway. So the time's going to happen. And the time is going to pass. And my encouragement
and it happens a lot faster than you think.
Oh my gosh!
If you're younger out there and you're listening to this, trust me, the clock speeds up. And don't think, well, I've got another 5 years to do this. Trust me.
Listen, when you were 20, your daddy probably told you that, and you didn't listen to him.
I didn't listen to him. I didn't. And hey, and that's exactly what I go back to earlier. Trying to tell somebody on this podcast or whatever what is this? Is this a podcast or a video?
Yeah, it's a podcast. It's a video podcast.
Podcast. Yeah, okay, I want to get the terminology right, but
I don't know. It'll be on audio only, but it'll go on YouTube, so it's a video and audio, but it's a video podcast.
But no, you can't. Through these things, you can't convince these people and expect them to be convinced to do something that you yourself didn't do back when you got the same advice. But hopefully it resonates with somebody, and hopefully it resonates with people to get them to take action, at least to start investigating this route and this path of financial liberation. I mean, that's really what it is for me.
And that's really my encouragement. Just look under the hood, see if this idea, this concept is worth investigating. My encouragement that it is, and just look and see if it is for you. And if it is, great, implement it. If it's not, no problem.
Yep.
It's just, have an open mind, look at things, just pay attention, just see. That's my encouragement, just to see. And I think, too, the idea of like you coming here and talking with me in this episode, I hope that people that are exposed to this idea can just listen to unbiased. You're not getting paid.
No.
I'm not. You're not, promoting me. I mean, we're both promoting the idea that you can become your own banker and there's real value there. And so my whole thought process for guests to come on this podcast is to have content out there that people would have access to, that are just thinking about whether this is good, whether it's not, should I spend any time investigating it, just to create a resource that didn't exist for you 6 years ago, didn't exist for me 15 years ago, just to bring value. And then quite frankly, I have fun talking about it, right? I get up every day to promote the idea that you can become your own banker. So it's not that there's nothing in it for me. There is a lot. We get calls every day, all day long, and we're excited to talk to people, right, and to get new clients. So, but at the end of the day, there's a lot more to this life than just getting paid, right? Just earning money. This is the only thing. As a matter of fact, since the coronavirus is going on currently, and this is March 19th, and we've talked about it in our office, right? This idea, this infinite banking concept, becoming your own banker, is the exact antithesis of what's going on in the big wide world right now currently. This idea of social distancing, this anti-capitalist idea of you can't go anywhere and congregate with anyone, that is so anti-capitalist, right? And this concept, becoming your own banker, is the exact thing that the average all-American businessman needs to understand, that we don't have to be dependent on a third-party lender. We can control our own access to capital. If that's true, and it is, then it's worth investigating. So thanks for letting me share that. I mean, I can just talk for hours and hours about this thing.
No, and I think it goes right back to the very thing that I said at the beginning of this podcast. I'm not worried. Now,
I love that.
Now, I don't want people to say, well, this guy's an idiot. It's not that I'm not worried for my family or somebody catching the coronavirus. I'm talking purely from a financial standpoint of what this coronavirus has caused in this country financially. I feel for the people that are affected by it, that are getting it and dying from it. I'm not trying to downplay that. But when I say that I'm not worried from the financial standpoint that everybody else is, where you've got markets crashing from 29,000 to 18,000. You've got oil that goes from $50 a barrel to $20 a barrel. I mean, the world is falling apart financially due to fear right now. I don't have that fear, and it's because, in large part, of my financial standing due to this policy. And
I love that.
I do not want people to think that this is a magic bullet, but for me and my family, it has been a blessing in more than one way. And I firmly go back to the very beginning of this video. That was one of the first things. I'm not worried. And from a financial standpoint, I am not. And it's because I've got this policy and I am able to support myself financially without the banks, without the outside influence of what's going on in the markets.
It's a love fest, Adam. It's a love fest. We love the infinite banking concept. All right. Well, what else? What else, young man? Anything?
I guess at this point, this is where you kind of come up with the review of what we've talked about, and let me just hit my points.
Okay.
Educate yourself on this program. Do not be afraid to try it. Do not be afraid to jump in with both feet. Do not be swayed by outsiders. Once you've made the plunge, do not be swayed by outsiders saying, man, I can't believe you did that. Let me put you in touch with my JP Morgan advisor and let's get you in a real investment. Do not forget that this is not the investment. Yes, it is an investment. It's an investment in your family. But this is not the end-all, be-all investment. You can get your money out of these things to invest in whatever it is that you're interested in. And that goes back, hey, invest in what you're interested in. I'm interested in oil. I'm interested in cattle. I'm interested in construction. I'm interested in building spec homes. That's what I use my policy for. So it does not preclude you or exclude you from doing whatever it is your investment style happens to be. You can do whatever, but do something. That is the challenge that I will put out to whoever listens to this. Do something. Whether it's get with James and decide it's not for you, or get with James and decide that it is everything that you hope it could be and you move forward, do something.
I like that. James is choice A or choice B.
But hey, you know, I don't want to sit here and say, get with James and do this. I don't want to be that salesman, James.
Sure.
You're not you are in a sales position. You have to show people the benefits, but I will tell everybody listening right now, I do not look at James. Let me talk to you, James. I do not look at you as a salesman. Right. I was never sold anything. My questions were answered. My education was confirmed. You helped me set this business up. You, in my mind, are not a salesman. A salesman is when you walk onto a car lot and they are pushing something down your throat. James, you never did that to me. I appreciate it. I know you don't do it to your other clients. They're going to appreciate that. And I know you don't do it to new people. So do not expect to get sold something. Be expecting an education and guidance. And that's what I want people to understand.
Thank you for saying that. I hate being pigeonholed. You know, I'm a father, a son, a brother, an uncle, many things.
Yeah, but. Absolutely. Other than that, James, I think we could go on and on. There's many scenarios that I could talk about. I could bring up questions that I've had that you've answered. But I think that for the purpose of what we're trying to do here, people have heard my story. They've heard my experience. They've heard some of the things that I faced, which was skepticism, research, all of these things that I know everybody is going to go through to some extent. I can tell you that I made the right decision, and I know that based on what I'm doing in my life right now. And I couldn't be happier financially or with the financial instruments that I'm involved in. I couldn't be happier.
Perfect. Well, that's I just appreciate you sharing, Adam. That's really what I want, is just for you to share from your perspective, and I think you've done a very good job of that, and I appreciate you taking the time and to even do that with us, so thank you very much.
Absolutely. Well, I think it is important enough to let people know. I'm not out there pushing this every day. I'm not trying to convince the world, and maybe I should do a little bit more, but that's just not me. And so just to let people know that the fact that I'm on here talking to people about this, it's kind of out of my wheelhouse. I don't normally do stuff like this, but it is an important enough thing in my mind, and something that has helped us tremendously, that I agreed to do this, and I want people to know that it's something very beneficial, that it's not just for rich people. It's not just for people that have a bunch of expendable income. It is for everybody. I think that any policy can be set up for any income level, and that they will be better for it. And I want people to know that this is for regular people as well. So
I agree. Thank you. All right, Adam. Man, I just appreciate you.
James, I appreciate you guys for sure. You guys have helped me out a lot. So.
All right. Well, listen, have a good day. And you got a cow out there calving, so.
Yeah. Time to go throw the rain suit on and go check these cows. That's the only time they decide to calve, is when it's cold, sleeting, or raining. So. That's
right. Muddy. Oh, my gosh. Yep. That's right. Well, it's her third one, so it shouldn't be any problems, hopefully.
Yep. Yep. I think I can. She's moved, so she's probably okay. So.
Spit that one right out. Okay. Well, thanks for taking the time, Adam, and we'll talk later. Okay.
Absolutely, James. I appreciate it.
You bet. Have a great day.
All right, you too.
Bye-bye.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.